Hello and welcome to another conversation in our ongoing series ahead of the Union Budget, just a few days away now for the big event. While there has been debate and different points of view about other verticals or spaces the government should focus on in the budget, the one where most economists seem to agree is the need to double down on infrastructure spend. In fact, that has to be a clear imperative for the government when the finance minister rises to speak. Many suggestions have been put forth, including putting more money into the national infrastructure pipeline or creating a new development finance institution to put all the capital availability into one pot. But what exactly are the key measures one should expect from the budget, and what really will kickstart the economy the way it is required? Because numbers, frankly, from the infrastructure side have been quite patchy so far. Joining me to talk about that is a host of guests who cover the spectrum really of infrastructure, from finance to what the core needs are to, of course, what the private sector can do. So let me introduce to you our panel for today. Puneet Dalmia, who's Managing Director at Dalmia Bharat Limited, VR Sharma, who's Managing Director at Jindal Steel and Power Limited, Saugata Bhattacharya, who's Executive Vice President for Business and Economic Research at Axis Bank, and Deep Gupta, who's Managing Director at Macquarie Infrastructure and Rail Assets. Gentlemen, thank you for joining in. This is a big one, and this is one on which expectations are very high indeed. Mr. Sharma, first word with you. CII and other confederations of the Indian corporates have put forth quite a bit by way of recommendations on what they want to hear on infrastructure. Specifically, when the finance minister rises, what is it that you want to hear her say about infra?
Yeah, thank you very much. The first and foremost thing is that today country is looking for about 300 million ton of production, steel production by 2030. Lot many projects will come, and there is a declaration by Government of India and Finance Minister that for the new projects they are going to give the relaxation in terms of taxation from 25% to 15%. So what we are expecting from government, that for the brownfield projects also such kind of SOPs should be available, because if you go only for new expansions, that means more load on the and more burden on the ecosystem. You have to acquire land, possess land, you have to have railway network, waterways, and water pipelines. So this is going to be a huge load on the ecosystem. It is easier to go for the brownfield expansions than to go for the new projects. This is one. Number two, we would like to request to Government of India and to propose them that the maximum income tax rate should not be more than 25%. Today, the worldwide, the developed economies are calling Indian non-resident Indians to come and to settle themselves over there, so that they can generate employment. Some of the countries are issuing green card just for the 5 people if you employ in their country, and they are giving citizenship if you have 10 or 12 workers or the employees you hire in their country. So I think Government of India should invite all of the HNIs and all of the NRIs to come and to start there some commercial institutes or MSMEs or something like that, so that the employment generation can take place. Last point, the Indian Railway will have to come in a big way as far as the new railway tracks are concerned. Water pipelines have to start, so that more and more steel consumption and cement consumption can be put in, and so are the other infrastructures like bridges, roads, and basically the track system. So if you see the Chinese, they have declared more than $3 trillion of project post 2020 February. I think if not $3 trillion, the Government of India should do at least $2 trillion at the moment. And more projects, if they come, then more and more economic growth will be there. Employment issues will be resolved. And we like that immediately the Indian railway system should come into action, and all 17,000 trains which are there in the country should run on the Indian track, so that the movement of the people from one location to another location can take place. Thank you.
Okay, before I get another corporate point of view, let me take a couple of steps back, though, just to get a lay of the land, sir, because I wonder if tax relaxation is, the only core point for which infrastructure is bleeding at this point. Deep, let's set the context over here. The numbers have been patchy, as I said at the start, particularly in terms of what's happened with capital goods output. It's not been strong enough for areas like cement and steel. The government itself has not been pulling its weight the way it should be. Numbers this financial year round, in terms of its capital expenditure budget, are actually less than what it did in the previous year. How much damage got done in calendar year 20, Deep? Because I think it's important to be realistic about, how much of a slump has happened to then recognize how much of a recovery is required.
Thank you, Midali. I think it's fair to say that once the COVID lockdown happened, and we were slowing down even last year, but that's had a material impact in at least the 3 months of the initial period of the COVID lockdown. We operate a bunch of assets in the road space, in the renewable energy space, and I can safely say that the recovery has been sharper. So you can see that in terms of the traffic movement on the ground, or you can see in the input of energy that's happening right now from our renewable energy assets, right? So I could say that yes, the impact is quite material. If you write down a quarter in a year, it's 25% already down, and that was seen in the first quarter of this financial year, right? Having said that, I personally I think it's a lot more better. India has recovered a lot better than some of the other economies. And when you look at the capital, and I represent international capital, right? So when you look at the international capital, I think their view of the resilience of the Indian infrastructure is a lot better than I would say a year back. So now, if you go back to, obviously we don't invest in industries like cement and manufacturing, but I would say that if you look at the on-ground situation of traffic, which is primarily in Indian roads driven by commercial goods, you could almost see that recovery coming through. So my view is that, and as this is something that we kind of tell our investors, is that we got to probably watch another couple of quarters before we can definitely say that there's been a sharp recovery. But at least on the ground, the stress seems to be lower. Some of these manufacturing and cement industries would obviously feel the pinch for slightly longer because the government still needs to come out with more capex plans. But I definitely see some sort of a recovery coming through. And what I do hope from the budget is that positive view of India, which is being taken by international investors, get translated into certain actions which allow more capital to flow into the infrastructure sector.
Puneet, you would be able to add color in terms of what's happening with core sectors like cement as well. It looks like the recovery is not as sharp as one expected or one hoped for. Are there enough shovel-ready public projects or even private projects at this point, when you look out to this calendar year, that you think will show meaningful recovery for infrastructure as a space and capital goods as a whole? You'll need to unmute yourself, please.
No, thank you, Mitali. I think first of all, I would like to say that overall, this has been a very uncertain year. And in this uncertain year, the government has shown great leadership. I think all of us in the corporate sector were very nervous at the beginning. And if you look at December, most of the people have done quite well. If I look at manufacturing, steel, cement, power, we started with minus 30% in April. And as we reached December, we are all in high single digit or even low double digit growth territories. Even if you look at the finance sector, I think there was a lot of challenge in terms of whether banks will blow up, more NBFCs will blow up or not. But finance sector is also in reasonably good shape. And now the vaccine is also coming. So we are seeing recovery in sight. But the real issue is there has been pain in MSME and job creating sectors. So the big question is that whether India can create jobs and create growth. And I think the case for investment in infrastructure has always been there. There has been political will. I've been hearing this for the last 10 years. But the question for me is that can we use 2020s as the breakout decade for India? There is a anti-China sentiment around the world. We always seem to be underperforming compared to our real potential. The question is, can we use that anti-China sentiment and India's rise as a superpower to become the factory of the world and to boost manufacturing? And I think in this, what I would like to see, you asked about public-private projects, more projects. I think that's always there, but let's understand what's the constraint to implementing these. Big announcements can always happen. The real issue is what are the constraints on the ground? And I think whenever a person looks to invest in a country, whether it's a domestic guy like us, or an international investor, I think one thing that they look at is cost competitiveness. Are we competitive in terms of input costs, power, logistics, labor, all of this? And I think I would like to see a roadmap, just like we talk about tax. We talk about, tax should be competitive all over the world. Fair enough. Just like that, should our input costs be competitive all over the world? So compare India to other nations which are pulling ahead of us and come up with a roadmap for power, labor, and logistics, all input costs to be compared to the best in the world. And this will automatically create a very clear case for targeted investment in infrastructure. So I think that is point number one that I would like to highlight, a roadmap for being cost competitive. I think the second thing is, which constrains investment, is regulatory uncertainty. I think if you look at, see, we all know construction is a job creating sector. Infra investments has to lead GDP growth, not lag GDP growth. But the issue is all companies who invest in infrastructure, or at least that's been the case so far, there are disputes which take enormous time to resolve. Capital gets stuck. And, I talk to contractors, they say there are disputes, nobody is willing to take a decision, let the courts decide. It'll take years and years for the decision. Similarly, if you look at large companies who have invested in infrastructure in India, whether they've built large roads, whether they've built airports, barring a few companies, most of them have not done well. So what is the reason? One of the reasons is that leverage, of course, and long-term capital availability. I'm not saying you should compromise prudence, but I think it's important to ensure that we resolve disputes really quickly, and people are, and there is certainty in regulation. So I would say that I'm not in favor of big bag announcements. I'm in favor of understanding what are the operational issues and ensuring that those operational bottlenecks are cleared away, and we use this as a breakout decade for India, and boost manufacturing to 25% of GDP and become a factory to the world. So I would say there are lots of projects going on. Public-private partnerships will continue to happen, but cost competitiveness and regulatory certainty and quick dispute resolution would be my focus and a roadmap for this.
All very valid points, Puneet. We're also welcoming Mr. R.N. Singh, who's Principal Executive Director for Infrastructure at the Railway Board. Welcome, sir. I'm going to come to you in just a minute. But Saugata, let me turn to you on the points that Puneet raised. And, it's not about 2020 and it's not about COVID. If you look at the quarterly reports released by the Ministry of Statistics and Program Implementation, this has been a 6-year running problem, whether it is significant time and cost overruns. And many of the reasons were the ones that Puneet was alluding to, whether it is regulatory clearance or fund constraint. Can the budget as an event itself clean or clear up something that has been such a long-standing logjam?
Good afternoon, everybody. I would rather say that in last few years, budget has not rather been a constraint. This government has been investing hugely into infrastructure, be it especially logistics-related infrastructure, be it railways, port, highways, or inland waterways. And the results are for all to see. Yes, many of the things what my friend just mentioned about problems in infrastructure development and expansion vis-a-vis the private sector is concerned. Many problems are there. It needs to be resolved. Many of them have been resolved, but still, you have issues of land, especially I can talk about highways and railways and other linear infrastructure. Land acquisition has become really difficult after the enactment of new Land Acquisition Act of 2013. There are many more formalities. Compensation has gone up almost 3-4 times. So the cost of land acquisition as well as the procedure rigmarole has gone up quite a bit. Then dispute resolution is also one of the weak areas. Towards improving that, government has come up with improved Arbitration Act, and a lot of things have been taken care. But still, from my own experience in railway infrastructure sector, I can say that this is an area which needs a lot of improvement, especially there is a sort of skepticism amongst I would say in government side about the outcome of these procedures. So they tend to go up higher forums like High Court, Supreme Court, and all. So unless all forums are exhausted, the awards are difficult to come by. In many few cases, only the arbitration awards are really, accepted as such without litigation. Towards that effort, government has allowed now 75% of the award to be paid immediately against the bank guarantee, even if we are going to challenge them in the higher court. So that has improved the liquidity a lot. With these, I would say in recent years have been very good for the infrastructure sector in expansion. And railway has also seen, capex going up from 50-60,000 in 2014 to 1.5 lakh crore, more than 150,000 crore. That is as of now. And we have seen a lot of investment in DFC. Before DFC project started in 2007, I am talking of dedicated freight corridor project, which total
Sure.
value of almost 95,000 crore. So what we had witnessed was investment of merely, I think, 10,000 crore in first 7 years. And in last 6-7 years, we have witnessed an investment of almost 50,000 plus crore. And we have also started seeing the commissioning of parts of DFC. Last month only, Honorable Prime Minister inaugurated about
Right.
657 kilometers of DFC, and now another 350 more kilometers are going to be inaugurated by March. So by March end, we will witness almost 40% of the DFC being commissioned,
Right.
which
So I
will
am going to
be.
come back to you with more questions on specifically what's happening with the railways, but it's important to get all the voices in. Shogato, apologies, I turn to you with the same question. What is it looking like considering the pile up we're looking at when we come to this budget for infrastructure?
No, you're absolutely right. So first, thank you very much for having me on the show. Huge privilege. Secondly, for the next year, this year we are probably going to get a contraction of anywhere between 6-7%. Next year, you'll see the bounce back. You're probably going to get to somewhere around 11, 12, 13% growth, real growth. Nominal growth will be much higher. The key problem, exactly as you mentioned, that because of the lack of adequate capex over the last 4 or 5 years, our ability to get up to a potential growth rate of 6, 7, 8% over the next 5 years to get to that $5 trillion economy, that's become a constraint, and that needs to be speeded up. The central budget itself cannot handle this because this year's total central government spending was about 31 lakh crores, of which only about 4 lakh crores was capex budget, of which there will be the defense capex, etc. So we need to involve the private sector. So that will be one of the hallmarks of what kind of new public sector, public-private partnership models. The second point is that the budget is not just an accounting exercise. I mean, it has to lay out a vision for growth, what the government strategy of capex and growth, etc., is likely to be. And the one point that I'd like to mention is that we heard about all the reforms that need to be done. We are uncompetitive in terms of power sector, in terms of labor, in land, etc. Unfortunately, the center has very little play on this left anymore. Everything is now down to the state level. So we are waiting for the recommendations of the 15th Finance Commission, which will be released just before the budget. I think the critical point that all of us will be waiting to see is what kind of center-state relationships, and particularly the reforms that are needed, as Mr. Dalmia mentioned, so critical now. And all of these will have to be done at the state level. So what kind of center-state framework that the budget lays out going forward will be very critical for investors and investment.
Mr. Sharma, let me come to you on some of the points that Puneet raised earlier. There has been talk about the sort of clear need to clear up pending payments, and the suggestion being made is putting up something like a public pending payments portal. Put it all out there. I know this exists for MSMEs and discoms, but not for all of infrastructure. Put it out there, show what's due to whom and make those clearances before you go ahead with green lighting more projects. Do you think this is something the budget can and should take on? And is that a big deterrent at this point, the fact that payments are choked, payments are not coming through to infrastructure players as they should? You'll have to unmute, sir.
Sorry. So there are 2 points here. What Mr. Dalmia told is very right. That in last 6 month time, government has done adequate, I would say, to bring the economy back on the track. And earlier, whatever the moratorium time was given, and whatever other tax reliefs and other benefits were given to the Indian industry, that has done very well. And this is the reason today I'll tell you about steel. The steel industry is doing very well, and everybody is running at a full capacity, or say at least by 95% of the capacity. And there is a lot amount of improvements are required as far as the payments are concerned. Yes, you are right. Indian Railway declared last year that they'll be consuming about 1.7 million ton rails in this year, but this was in January 2020. Unfortunately, after that, the COVID started, and the complete system go haywire. I'm sure in the next year, that is 21-22, the government of India and Indian Railway will consume that much of steel, about 1.7 million tons. If this happens, then definitely this will bring a lot of liquidity in the market. Ultimately, as you know, whether steel or cement, about 60 to 70% consumption is government-driven projects. Once these government-driven projects they start performing better, then everything goes on, rolls on, and the economy comes on the right track. Now the point here is like discoms, we are still facing problem in recovering our payments, or the payments are delayed beyond even 3 years. So we have, I'll not name a particular state, but a particular state, the state electricity boards, they are owning about they owe about 1700 crores of ours, and it's very difficult to get this money back. So slowly, gradually, okay, we are always given given an assurance that yes, from next month onwards the situation will improve. But unfortunately, it is not improving. And though 90,000 crores were allocated by Government of India to different discoms, but this money has not reached to the energy producers. So we have a power plant. We produce about 4,800 megawatt, and today we have about only 1,000 megawatt as PPA. Balance 3,000 megawatt we are putting into energy exchange. So here I would like to explain you a few of the very vital points that we have to come today or tomorrow on one Bharat, one electricity tariff. Today, unfortunately, the tariff is ranging from 4 rupees to 16 rupees in this country. We have 32 different tariffs in the country, whereas the developed economies, they have only single tariff or maximum 2 tariffs. China has 2 tariffs, 4 cents and 4.25 cents. France has only 1 tariff. Germany has only 1 tariff. But in India, we have 32 tariffs. This is something very strange. What we have to do, what we are expecting from Government of India, that in times to come, if you want to have a horizontal growth pan-India basis, MSMEs and also the large players, large industrial houses, if they want to put up their industries somewhere where the industry is power-intensive industry, then the power tariff has to be similar. So we are exporting power. Exporting means injecting power to the grid through the energy exchange at 2 rupees 60 paisa. So by the time it reaches to the last mile customer, the per unit price goes to 10 rupees, 12 rupees, 15 rupees, and sometimes even more than 15 rupees. So this is something to be addressed immediately. And if we have on pan-India basis power at one tariff, then there will be growth in each and every state and each and every corridor of this country. The another point is as I was telling you, the basic infrastructure. Like government has come a plan to make water available to every citizen of the country. This is a wonderful project, and the larger and larger pipelines are coming from various rivers, and these rivers are bringing the water to different major cities, and from there it will be purified, it will be delivered to the domestic users. So this is a very wonderful scheme, so that each and every citizen of the country, he or she will get potable, drinkable water. And for that, there is a lot of capital required, and this capital is to be released. The another point I'll tell you, the country has a vision to produce 300 million ton steel in the country by 2030. So it is 9 years which are left. So if we have to go to 300 million ton, which is a necessity also, then we need to spend at least 10 lakh crore only in the steel industry. And you can imagine 10 lakh crore from where this money will come. So what we are recommending and requesting Government of India to immediately come with a financial institution which can support the core sector industry, so that finally we do not need to import steel or any other product or commodity which is very vital for the nation. So already Honorable Prime Minister has worked on the Atmanirbhar Bharat campaign, and I'm sure the PMO and the Finance Minister must be working on this as to how to start a proper financial institution so that there is no capital shortage for the new projects or in terms of capex.
Yeah. Puneet, let me draw you in here. Is capital shortage the biggest problem that some of the companies are facing? Because honestly speaking, it's not just about 2020. Over the last couple of years, one has not seen significant capital expansion, nor has one seen significant greenfield project plans being announced by corporates. Things were running tight, and perhaps in an effort to protect bottom lines, capex was not conducted in an aggressive manner. Is this about finance, or is this about business slowing down?
You're talking about the cement sector or the infrastructure sector in general?
Your sector, of course, Puneet, but by way of cement, you have a finger on the pulse of pretty much everything else.
I think in cement there is no shortage of capital. I think if it's about prudence, it's about forecast of demand supply. So right now the industry is running at about 70% capacity utilization. Of course, it's regional, and there are some parts of India which are running at 90-95% utilization. Other parts are running at 60. So blended, we are 70%. And I think investment will happen as there is more demand visibility and as there is more certainty about the future. I don't think there's shortage of capital. I think if there are credible entrepreneurs and if there are bankable projects, there is adequate financing available here. However, having said that, I think in infrastructure sector, you need patient capital and you need long-term capital which can support this kind of growth. So I think my personal view is that if you look at the world today, we are living in a zero interest rate world. And there is a lot of capital in Europe, in Japan, which can be harnessed in a proper manner for funding many Indian projects. Of course, there are exchange rate issues which need to be looked at. But I think if there is a comprehensive, thought process, I think they have announced, I think 1,000 projects which Finance Minister is personally monitoring and PMO is also personally monitoring. But I think I see that if there is a holistic blueprint about what infrastructure needs to be built, how it will be financed, how the projects uncertainty will get reduced around land, around clearances, around disputes. I think we can attract a lot of foreign capital at very competitive rates, which is looking for a stable place to go and good investment opportunities. People don't expect much return, even if we can give mid-single digit returns, 5-6% over 20-30 years. I think a lot of capital can come into India, and I think an integrated plan to attract foreign capital needs to be sharpened, according to me.
Sure, Deep, I want you to come in on that. Are we asking capital to be too patient at this point? And when we look at even the FDI figures, frankly, it's quite underwhelming for infrastructure. I mean, in the last year, 58% went into computer, that too into one company. Infrastructure did not pull any significant amount of foreign fund interest. What's happening over there?
I mean, if you're looking at, in the near term, like the last 1 year, Mitali, I would say that it's been, the infrastructure capital, like Puneet was saying, is more patient capital, which is risk averse. So as soon as risk goes up, people do hold back on some of the investments. Having said that, really my view is that it's pretty similar to what Puneet was saying. I think there's a lot of capital available for reasonably good assets, right? And that's something that if you look at the national infrastructure pipeline that the government wants to come out with, I think it's a good idea, right? You've got these assets which are currently being owned by either the government or the public sector undertakings, and they can be bid out to probably private parties. Roads has been a very successful area. You look at renewable energy, that's been a successful area, right? So there are examples and models which could be done across other sectors. And to me, capital is probably the last equation to solve, really. I mean, the reality is there's very little good quality assets globally available for infrastructure. If you look at how bids get done for solar, whether it's in India or anywhere else in the world, or you look at the pricing of infrastructure assets in Europe, I think you can safely say that there's enough capital available. One of the points that I mentioned when you asked me the previous question was that the government needs to ensure that that capital can come in a safe manner to the country. Points have been made around regulatory certainty. I think people do like that. If you've got regulatory certainty, people are willing to put in a lot of capital. And as long as you create what I would call as a level playing field for everyone who's trying to come and invest into the sector, I think you will have capital. So I'm not so fussed about the capital. I'll rather be looking at, if I was the government, I'll be looking at what kind of assets to bring to market and what kind of frameworks to bring. And I know we've got this panel where there are people who are probably more experienced than me, but I can safely say that, roads, for example, the concession framework is very good. It's a very high quality. It's probably one of the best in the world. So you could probably learn a bit from that and put those frameworks together for people to come.
Yeah. No, it's amusing because, in the last panel that we had was a conversation about what to do with banking, and everyone seems to agree that capital is not really a big problem, nor is it something we haven't made our way around. We've had IFCI, IDBI, SIDBI, all of it, but now we want another new DFI. So I wonder why everyone's going on about capital when clearly the people on the ground aren't. Mr. Singh, you're here and you can answer some of Mr. Sharma's questions. He's wondering when the railways goes back to that target of 1.7 million ton rails. And if I could add to that, sir, this national infrastructure pipeline, the amount allocated for railways was actually as high as 16 trillion. Perhaps you could help us in terms of a roadmap on how much spend is planned or envisaged over the next couple of years.
See, as far as railway infrastructure is concerned, we have huge potential in upcoming DFC corridor. One is from Sonnagar to Dankuni, which is about 512 kilometer double line electrified dedicated freight corridor, and which is being contemplated to be put on PPP mode. So, again, PPP mode requires, for a successful model, requires that almost 100% of the land must be available in a linear infrastructure project like railways or roadways. And your risk mitigation measures should be in place, because you cannot pass on 100% risk to the private player. So in railway sector, PPP model as such has not seen much success apart from joint venture models where there is adequate certainty of revenue. So the revenue certainty or revenue risk is very high. Keeping in view that, we have proposed annuity models also. In annuity, revenue risk is taken by the authority, and only financing and construction risk is passed on to the developer. So that model we have found, very attractive for railways, which we are trying. And then you talked about national infrastructure pipeline, which envisages about 13 lakh crore worth of project in railway sector in next, 5 to 7 years, which majorly includes, new dedicated freight corridors, especially in mining areas, 4,000 kilometer. One is East Coast Corridor from Kharagpur to Vijayawada. Then there is East-West Corridor from Bhusawal and Nagpur to Kharagpur. Then there is North-South Corridor from Itarsi to Vijayawada. So these 4 corridors have been identified, and DPR is already in progress. In next 6 months, DPR results will come out, based on which decision will be taken based on the IRR, which one are to be sanctioned. And I hope that almost 3,000 kilometers are likely to be sanctioned at a cost of almost like 150,000 crore, including the cost of land. Then another area of potential investment and would be high speed. Once this Mumbai-Ahmedabad project takes off fully, now it has taken off in a big way, and progress is going to be full-fledged in next 1 year. So in DFC also we are envisaging, PPP model, a pure BOT model where entire land corridor would be procured, and all utilities will be shifted, and then entire corridor will be put up to the bidders with 100% FDI, where the concession for 50 years will be awarded for design, build, finance, operate, and for 50 years all revenue can be kept by the concessionaire,
Sure.
and some will be shared. So all these projects are coming up. Many high-speed corridors are also being envisaged, for which surveys are also underway, including Delhi Banaras, Delhi Chandigarh Amritsar, Delhi Ahmedabad, then Chennai Bengaluru, then Banaras Patna Howrah. So all these
Sure.
corridors are also, under study. DPR has been ordered, and next 6 to 7 months we may witness, many new projects and announcement from government side, especially in railway
Mm.
sector. Then we have a major, investment which being envisaged in private train operations, for which RFQ has already been finalized, and now RFP is being planned, in which private players are supposed to tie up with a local player, especially the ones who manufacture the railway coaches. They tie up with the local uh, this hospitality player to run the trains together on the railway infrastructure against by paying the access charges. So that
Absolutely, and one
model
hopes
is
many of
already
these
in
details
vogue
come through
in all the
in the
sectors.
budget speech itself as well, sir. Saugata, I want to turn to you though to talk about the other elephant in the room, which is disinvestment, because that was another sort of calling card for the government, saying that a lot of the proceeds from disinvestment will then be pumped into infrastructure spend. How hopeful are you on that front? And have you sort of penciled in anything in terms of a target? Because clearly, from the last year, we are very far from the divestment target that was set in the budget speech versus what has actually been raised.
So you're absolutely right. So I mean, resource raising will be very, very important. Tax revenues, obviously, given the buoyancy in taxes, it's unlikely. So 2 points before I come into this. One,
Yeah.
we already have something like a long-term DFI built in for infrastructure financing, which is the National Infrastructure Investment Fund (NIF).
Yeah.
So and the various NIF, IFL, the IDFC's part. The second point that I want to make is, by and large, you're not going to get foreign investment. Foreign funds are available. I mean, there's absolutely no doubt, but not in the construction phase. By and large, you will not get foreign funds in the construction phase. The construction risk will not be taken on by foreign investors. But foreign investors, so we alternative mechanisms like InvITs, etc., IDFs, infrastructure development funds, these need to be addressed. Coming back to your core question in terms of disinvestment, last year's target was about 2.1 lakh crores, of which I think we'll probably get to something like 60, 70,000 crores this
Yes.
year. That pipeline will get shifted over into FY22. The big ticket items like BPCL, LIC, maybe a little bit from Air India, and a whole host of others. And current market conditions, valuations for many of these potential disinvestment targets are still relatively good. So disinvestment has to be, and not just disinvestment of companies. What we heard in from the other speakers, asset monetization. The government is sitting on something like book value of 19 lakh crores for a year or so back. So asset monetization of everything, land, airspace, water space, whatever is available. The railways has already moved forward with a number of initiatives in asset monetization. So both disinvestment as well as asset monetization, both physical assets as well as financial assets that the government is sitting on, will be a core part in the ability of the government to start funding capex projects, as you mentioned, which is needed at this point in time, because private sector will come in at a later stage, not immediately.
Puneet, I want to go back to your previous point, which is about fixing what is broke rather than looking out into, announcing larger big bang projects. And you talked about regulatory uncertainty. Within that, on two issues, um, Are you as a company or are your peers facing execution related uncertainty, and do you need more support while a project is actually underway? And secondly, are you facing any localized issues? Because it's important to understand how important the role of states here is. They are very large players both in terms of infrastructure spend. They are also suffering much more than the center because of COVID. uh, on those two counts, are you facing localized issues, and are you facing issues while the project is actually underway?
No, I think that's a great question. And I think I will just add to what Mr. Sharma was saying. I think for greenfield projects, land acquisition is a very big issue. So if you look at a cement greenfield project, you have to buy about maybe 400 acres for the plant, which is not much. But for mines, you have to buy almost 2,000 acres because large limestone deposits are gone now, which are thick and which have deep limestone reserves. So you have thin deposits, which is like maybe 5-10 meters. So you have to buy large tracts of land. And as you know, in India, land holdings are pretty small. So, 2,000 acres of land buying, or let's say 2,500, including plant land, would mean almost 2,000 transactions because it's 1 acre per person. So, you can't aggregate all this simultaneously. So there are, you initially buy maybe 400-500 acres, then you buy another 400-500, and as you continue to buy, the price keeps going up. So there is lot of local politics in this that after 2 years people will say कि आपने जो पहले फेज में खरीदा था उसको आपने कम पैसे दिए तो basically लूट लिया आपने villagers को. So there is a lot of local politics which happens, and there is a lot of let me say issues which happen during public hearings of these projects. So I think government earlier used to acquire land, which I think is very difficult to do now. And I think maybe that's the right approach because government says like, you solve your issues bilaterally as opposed to we getting in. So I think land acquisition is a big issue. And my only issue was that if you're giving a mining lease to some company, can you pre-package that lease in terms of all clearances? Environment clearance, forest clearance, land rate can be prescribed by the government. If the government has decided that this is a mining resource, which has to be mined and used for industrial development, if that decision has been taken either at the state level or at the central level, then all issues to bring that to market and convert that deposit into GDP growth, need to be sorted out in a transparent and a prescribed framework. You can create a rehabilitation and resettlement policy, but the uncertainty in terms of timing and local politics should be taken away from investors. So I would say that for greenfield projects, this just causes delays and this causes uncertainty and escalation in costs. So I think in cement, I think these problems exist. Then there is one more issue. Once you put up a plant and you have to now build railway siding. So let's say railways is there, it will not be inside your plant. You have to put a connectivity infrastructure to connect to the main railway line. Again, you have to buy strips of land, and there is complication around all these issues. So just connecting to the main national highway, if you have to build a road, if you have to build a railway line to connect to the main railway track, sometimes even power lines, I think these just cause issues and these cause delays. I think Indian entrepreneurs have learned how to deal with these issues over decades, but I think this impedes foreign investment, and it also creates delay and entry barriers. So I would say this needs to be looked in. Pre-packaged, one clearance with a transparent prescribed framework for resettling people and paying them in time.
And even an Indian entrepreneur has a limit to his tenaciousness, right? Or her tenaciousness. So, Puneet, Saugata, is it a utopian idea, or is it something that can actually actively be considered? A single window clearance where, you're resolving issues of land acquisition, environmental clearance, all of it in one go. But I must juxtapose this by saying that both the existing labor law changes that have been recommended and the environmental law changes have met severe criticism and are up for debate at this point.
No, it is in terms of the. I mean, there are always trade-offs. I mean, with if you want to speed up investment, which is what China is excellent at, it doesn't care about other issues. I mean, so But in India, well, I don't know who mentioned this. So it's state by state. I mean, so in China, for instance, there is a template that you do a deal with one local village enterprise LVE, and that same template gets replicated across all the projects in China. In India, whenever you do a project, a foreign investor comes in, it is state by state by state. Now, many states have actually instituted single window clearances. That's fine. I mean, so you go, there is one window in which you submit your application. The problem is from this window, it goes to multiple other departments. So, I mean, the window is there, but for all effective purposes, I think this is something that, I mean, Maharashtra has a single window, Punjab has a single window clearance. So all of that is there. But the process of coordination between various government departments, that needs to be speeded up. And again, this is a state issue. But one good thing, and obviously you will hear time and again, that a lot of the obstacles, the hindrances, the impediments that we now see investors now face are actually software issues. It's not hardware anymore. We have a lot of digital platforms. It's the capabilities that need to be built up right down to the Gram Panchayat, the municipal levels. And that's something that we hear from industry associations again and again. The governments are trying, but again, I mean, this is a political economy game. I mean, this is not just a clean economic thing. There's a lot of politics involved, as we just heard, involved in this. It's a political economy, and the center. This is, I think, critical now for the center to manage this political economy with the states and sub-state level entities.
Mm. Mr. Sharma, part of the problem also is that we're looking at infrastructure from a very top-down approach. I mean, all of you represent really the cream of India's infrastructure, whereas the pain is perhaps in India's MSME segment at this point. The smaller guys who have really found it difficult to both stay afloat and perhaps even access liquidity for themselves. On that front, what would you expect the budget to do? Because there's been talk about tax exemptions, encouraging them to move towards, greater capital expansion or at least investing in capital equipment. What do you think will help the MSME space at this point?
First and foremost is the manpower. I mean, most of the MSMEs today, they are facing acute shortage of manpower. And the people, those who migrated during COVID lockdown time to their home states or hometowns, they are not turned back. So this is one of the major burning issue today with MSMEs. And the another point is the cost of labor has gone up. Few of the states like Uttar Pradesh, they have already given some relaxation. Okay, you can have a 12 hours of working or something like that. I mean, but not all the states have done so. So I think some more liberal approach is required, and the government authorities, bureaucrats, they have to understand that all of these MSME people, they are basically an entrepreneur. Those who are a working class people or those who are having very low capital, they got converted into MSMEs and they are vendor to many of the companies, many of the major OEMs. So you have to see them very pragmatically and very with a full, I would say, sympathy. And the labor laws, and their salaries, wages, the provident fund issues, those are to be handled in a very friendly manner. And more so, I would request Government of India and also Ministry of Railway, please restart the Indian Railway trains as early as possible, because most of the people, those who are stranded in their home states or hometowns, they are still unable to move and come to the projects, not only to MSMEs, but the basic infrastructure projects also, people are facing acute shortage of manpower. So this is one. The second is, the government has already given them incentives, like in terms of the relaxation in terms of GST or some other benefits like rate of interest and everything. So, but they need more. We have to handhold them. We have to bring them to this particular this epidemic, which was a pandemic, and for them it is epidemic because 4 to 5 months time they were totally closed. Their shutters were closed. They had to pay the salaries and wages to their people. Even they had to pay the electricity charges. Even the fixed charges of electricity they have paid. So this is something, a big ordeal what they had passed through. So what I would expect from government, that more and more relaxation should be given to MSMEs, and we should show a great heart by holding their hand so that they sail through. I'll also tell you that there are 65 lakh registered MSMEs in the country. And today, if you see out of the 65 lakh MSMEs, hardly 5 lakhs are in profit. Balance 60 lakhs are making huge losses. So we have to see that how to convert a tier 3 MSMEs to tier 2 and tier 2 to tier 1 so that they can be a real pillar and backbone of the industry. And unless we appreciate them, we cannot address the issue. One more thing, as I told in my opening remarks, that these MSMEs, as I told you, they got generated or they got converted to MSME owners from a working class persons or from a low capital business people. So today, as I told you earlier, as explained, that the worldwide, the Indian non-resident Indians, Indian affluent class, they are invited to come and to set up their shops, whether it is Australia, it is England, or it is America, or it's Canada, or anywhere in the world. So government of India must invite the potential businessmen from all over the world to come and to set up their shops, commercial institutions, and also the MSMEs, factories, or whatever they can do, so that even if one person generates about 10 employment, then you can imagine if you have lakhs of people coming in the country or from the country itself, then
Yeah.
crores of employment can be generated. And
Yeah.
this is what is needed today in the country. So I would suggest government of India should look into it as to how to develop more and more MSMEs, how to develop more and more entrepreneurs. And then only we can address the issue, because there will be ground level growth. This is
Yeah.
what my view.
Yes. No, you raise a very valid point, sir. And I think this is akin to what we saw post demonetization, where different parts of the economy recovered in very, very different ways and left, perhaps permanent scars on some sectors. Uh, Mr. Singh, just on that specific point, perhaps you could answer and let us know when we can expect complete resumption from the Indian Railways, because that in itself, as you heard, is sort of a secondary incentive or a secondary push to getting business back on track, to getting labor back on track.
See, as far as freight market is concerned, it's almost come back on track. Everything is back, and we are loading almost at the same levels which were in these months last year. In fact, we have improved loading because of many other reasons, because of mainly because availability of the track for moving the goods trains and freight trains. And cumulative basis, we have almost achieved the same levels of the first, 10 months of last year. So, as far as passenger segment is concerned, there is still, COVID-related restrictions, and only, 25% of the passenger trains are moving right now. Uh, that too, specific areas. Almost all the areas have been covered, but the frequency of trains and some of the trains have not been resumed because of these COVID-related concerns. And I think in a gradual manner, we are introducing more and reintroducing more and more trains, and by perhaps by April end, 100% services must resume.
Okay, fair enough. I'll take that answer. April end is what we hear in terms of railway traffic and railways resuming absolutely back on track. To the other gentlemen, we are very short in time, but I want to hear from you. And I know I'm pushing you to do this, but the one thing that you really want to hear from the finance minister related to the infrastructure space, Puneet, let me start with you.
I want to see a roadmap to make India cost competitive over the next 5 years on all input costs.
I like the one sentence, Puneet, and to fill that in, I think will be the task for the finance minister. Mr. Sharma, from you, I know you talked in depth about MSMEs, but the one thing you would want to hear from the FMNC rises for your sector.
Projects will be given a priority because that will be a great help to the ecosystem of the country. And whatever benefits you want to offer to the new investments as a new field, as green field, those should be also applicable to the brown field. And last but not the least, one Bharat, one electricity tariff is very much needed in a country like ours. to have the inclusive growth right from Kashmir to Kanyakumari and Gandhi Dham to Guwahati. Everything, one tariff. It is 4 rupees, 5 rupees, or 4.5 rupees per unit. One tariff, one Bharat. That we should promote.
Yes, this has been a long-standing Achilles heel for our economy indeed. I agree with you. Deep, what do you want to hear from the finance minister?
Yeah, Mitali, I'm a third-party manager, and one of the things that for the infrastructure investors to come in is a level playing field. So I'll only say this, that the tax benefits that are available to sovereign wealth funds and pension funds should be available to infrastructure investors like ourselves, which are also long-term investors and have the similar capital at the back.
That's a very fair ask. Saugata, last word with you. What is it that you would like to hear?
So, I mean, in a cash resources strapped budget where you don't have direct money, and we are looking for this. The template is the ECLGS scheme for MSMEs that was rolled out, very successful. So we want to see more of such credit guarantee mechanisms for infrastructure, particularly because infrastructure, remember, a lot of corporate bonds need to come in, a lot of bank funding needs to come in. So that needs to be backstopped and supported by the government, which does not require outright payments. So we are looking to see more and more of these credit guarantee mechanisms that you already have some templates in the budget.
Fantastic. Thank you, all of you. Great insight over there. Cost competitiveness, get the tariffs to be on one platform, help the MSMEs, and of course, address the liquidity issues and incentivize those who are ready with liquidity. Thank you very much for joining in on today's discussion. It's been hugely interesting, and I hope the finance minister is listening, but we will know, of course, next Monday. From the team here, for now, goodbye.
Thank you,
Thank you,
everyone.
Mitali. Happy to talk with you.